Hi everyone, welcome back to this week Weekly Market Update. As usual, let's take a look what happening on last week and things to watch out for the coming week and things to watch out on those certain counters which I've pinpointed to give you guys warning sign on last week, which it happens to realize on this week, last week as well. So if you have been following my Facebook page, Telegram group, you should see that I'll be posting a couple of stuff, especially during this volatile period. Hopefully to help you guys step by step to get more understanding of what's happening to the market and prevent you from huge losses and you're actually one step ahead. It might not be that precise after all. I can say it's not 100% accurate, but I can say that at least 70 to 80%, or it does help you to get updated on what's happening to the market as well. Just simply understand or listening to this 10 to 20 minutes of video, right? All right, so without further ado, let's see what happened on last week. But before that, remember to share and follow my Facebook page to share with your friends who are actually investing, give them some help, some highlight of what's happening to the market. Anyway, it's free, right? Just share it will do. All right, so last week we can see that Dow actually closed 800 point higher on Friday, registered 4 straight week of gain. You might be puzzled, right? Because why? Because I've been saying that do not fight against the tape, the Fed, when we are actually at an interest rate high environment, high inflation rate environment. How come the market went higher? Will you be puzzled? Yes, I do. But why should you be puzzled? Because last week, even from my my Facebook page or in my Telegram, last week I show you guys a very up arrow. Can you see that? I say that this is on my Telegram. Last Tuesday, I put a warning sign. It may go around 31,500 to 32,000. This is post on last week, 23rd. And on top of that, that means 2 weeks earlier, I already give you guys a heads up warning, right? I'm right to say on the 18th November, where we are so way below, okay, I say that we might hit that level, so it continue to go higher this week. And what happening to this week? Last Friday closing, can you see? I didn't remove my arrow. It's stick here. I didn't redraw anything, just to show you what happened on last 5-day candlestick. This is day candle 1, 2, 3, 4, 5. So last week I mentioned this is happening. We are looking at this area, shaded area, and then we need to watch out for the candlestick to see the price action to determine the next level, right? Why? Actually, it's not very, perhaps you can say, coincide. A lot of people is watching this candle, especially me as well. We are putting this candle as a resistance, firstly. So can you see that on Thursday, right, when the market tried to go higher, right, it's being resisted. Do you guys realize? All right, the market tried to go up and then it's being resisted and then it fall back. But the thing is that this is not showing any bearish candle yet though. Alright, if let's say it show any bearish candle, right, the following day it should go below. It shouldn't open higher and go even higher. You get what I'm trying to say? So this is actually a sign. So there is no price action candle to show that market is reversing. And therefore, when it goes showing this sign, the next things I'm watching out is not this level as resistance. I'm watching out at these 200 days as resistance, firstly. Alright, but the thing is that it break above it. Why? Because what you see is what everyone see. Am I right to say? Everyone is waiting for a resistor over here. Alright, so it break up, it cut all the stop loss out there. It caught you in surprise. Can you see how many times? It caught you in surprise. Alright, before it actually reversed down again. So the thing is that right now we are actually in the environment of what? Earnings report. So what causes the market to hype up? Firstly, tech is oversold. Can we say that? As you can see on last week last week earnings, we know that Amazon, Google, especially Facebook, which called Meta, is not performing well on their earnings report. But so surprisingly, Dow Jones went up. Of course, because this is all under Nasdaq, right? So what happened if you go and zoom in individual counter for under a Dow Jones category, that means the top 30 company, you can see that actually those company is doing very well. Not like Nasdaq. All right, can you see Caterpillar earnings report is very, very good. The market gap up, continue to go higher. Can you even go and see McDonald's? What is happening over there? All right, the earnings report is fantastic. So that's why right now we can see people from tech sector, investor from tech sector, understand the interest rate of the impact to high debt sector such as tech sector actually not making good in their earnings report. So they might actually diversify or they might actually change, it's called a cycle rotations, rotate it to a more safety counter like the top 30 Dow Jones Index, or they might move into S&P 500 as well. So when you can go and compare, right, even though for Dow Jones there is a surge of going up, but S&P didn't surge much, firstly. Can you see that? This is the top, all the way top. Alright guys, this is all the way top. We can see that it's only here. I mean, on visualize, we can see that it's only here. But when you look at Dow Jones, or we see Nasdaq first. For Nasdaq, can you see? This is the top. This is the rebound on last Friday. We still see a huge gap here. But as well, you go and see Dow Jones Index. How does it perform? Can you see? Here is the top. It's only here. So this is way more than the S&P 500 and Nasdaq. Can I say that? So the thing is that this is why market actually caused for Dow Jones to spike higher with a high volume, mainly a switch, mainly the counter that is categorized under Dow Jones Index actually went higher. But ultimately, where are we looking for Dow Jones Index then? All right, so after last week, where we say that we are looking for this candle to go higher, right? Let me just redo everything so I don't need to go and delete. Sorry, I need my chart, gentlemen. Okay, so we are back to here. Okay, so we are back to here. We can see that this is the candle. We just go to the weekly candle and we see how strong and how bullish can it be. All right, so based on the Fibonacci level, right now we can see that from the top to the bottom, we actually hit the 50% Fibonacci level. Am I right to say? Okay, so in order for it to turn bullish, definitely certain things play a part, such as what will be the earnings, continued earnings report. The second thing, the next resistance level is this level. This is a very strong level at 61.8%. I won't be surprised it hit here, 33,000, sorry, 33, 34 before it rewind back. All right, but I am just based on the price action. I am not a chartist. So we got 1 week, 5 candlestick to play. All right, gentlemen. It can be here before it come down. But what happened right now, I feel that yes, we may see some pullback perhaps on Monday itself or Tuesday because it's over spike. All right, or it's trying to form this kind of fake resistance once again before it came down. So watch out if let's say the market able to correct back to the 200 days and stay there for next week itself. We need a weak candle. So don't be surprised. If let's say the market is moving, hovering around here, it's a good sign. All right, if the market quickly drop back and bounce up, then not that good. All right, the market will continue to be bullish. I mean, it's good if let's say you're a long-term investor, right? But then do take note couple of things next week. Not just on the earnings report itself. Next week is also economy heavily data, the first week of the month. So everyone is eyeing on certain economy data like jobless claim, especially on the non-farm payroll, to see how is the market jobs out there. Following by next week, everything is waiting for these final decisions, which is the following week. I mean, the week after next will be the FOMC rate decisions. All right, so they want to catch what is the stance for the Fed right now, whether they are hawkish or dovish, whether other 75 basis point, will they actually subset or reduce their interest rate hike, their stance of it. All right, because they have been hiking 75 basis point a couple of times, but the data showing is not showing that inflation is anywhere coming down. If the market has become going back higher and higher, perhaps back to 35,000, so what Fed has been doing of interest rate hiking doesn't show any impact anymore. All right, so we won't know what is showing right now at the moment. That's why it's very crucial for next week, especially we are stepping into the last 2 months of the year. So be cautious of couple of level. Firstly, we should watch out on sorry, let me just remove the stuff. All right, we should watch out on this level 35. Maybe I just write it down first. All right, so look at the weekday candle. So we should watch out on this candle. This is a weekly chart. All right, so second thing, 34,000, one level, second level. All right, so lastly is this 50%, right? This is the third level. How is it performing? Okay, so we can actually just write down. So today is 30th October 2022. So resistance level, okay, 50% Fibo, which is current level 32,800, followed by 32,800. Okay, just round figure will do. Next, okay, next level to watch out is the 34,000. All right, this is the 68 point. All right, sorry, 62.8% Fibo at 34,000. Or lastly, this candlestick. All right, this is the. I think this is called the hanging man, if I'm not remember correctly. Hanging man candlestick high. All right, so this one is the hanging man candlestick high. Okay, so it's around 34,300. But to me, I don't feel there's any chances it will go above this level, or it might form a weak high wick before it come down. Just nice it go to the Fed. All right, because 75 basis point, you know, the market like certainty. All right, the market likes certainty. If let's say we know that yes, continually showing 75%, people may neglect what is the impact of it, not knowing, because they are short term, right? They okay, they just 75 basis point. After all, the earnings is good, everything is good, life is good, so we can't continue to buy, continue to catch, fear of missing out. True or not? So if suddenly the Fed hike 100 basis point, everything will stumble down. All right, so because we have been preparing what is coming up for the interest rate, so market seems stable at this moment. But ultimately, like I say, for me, I'm still riding with the trend on the Dow trend unless it come back to this level. There we may see there might be some change in the stance if let's say Fed is going more relaxing mode, not to go for the rate next hike. All right, so this is what I'll be looking at for next week as a resistance. Okay, so I will just put here. All right, so that's all for this week Dow Jones Index. So let's take a look. So sorry, I straight away jump into the chart. So last week, this is what I've mentioned. Basically, the market actually stumbled down due to Microsoft, Alphabet, Meta, then increasing the optimism of Fed could break from its trend of 75 basis point rate hike. So it's what I have mentioned again and again. So I'm not going to it. So big tech not performing well, especially from Facebook. We'll look at Facebook later. So coming week, watch out on certain counter, which I'm actually eyeing on this AMD. Why? Because Intel actually surprised me. Intel, if you are investing in Intel, Qualcomm's, all these which is related to chips surprised me. Next is actually Corps. You know, Ezon and Chevron, I think they are performing well. Good earnings. The market actually kept up. So Phillips is also one of the counter in the energy, the oil sector. I think they will be performing well as well. The whole industry of energy is performing well, right? So just watch out. Okay, so let's go to the chart instead. Let's view a couple of stuff. So firstly, we shall see jump into Meta. Okay, for Meta, right, this is not good. Can I say this is not good? All right, this is very ugly. Okay, so why? Because the earnings report is not doing good. They are burning a lot of cash in the metaverse. So in my Telegram group, I say that just ignore. I mean, ignore the pain for once, right? Once it's gap down, do not catch. All right. Yes, there might be technical rebound. Okay, there might be technical rebound, but then this is what happening. Can you see that? Their last earning report, let's see. Their last earning report. All right, you can see the surprise at the revenue and the earning compared to this yesterday earnings report. Surprise losing 30%, surprise plus 1%, plus 1%, losing more than 4%, right? This gap down, the market continue to came down. All right, it continue to came down. Okay, so what is happening? Yes, we may say that it's really the bottom because it's break the 100 point. But I think if you go and read the article, what actually interviewed with Mark Zuckerberg, he said that we still need more spending on the metaverse before we can see the light at the tunnel, right? So meaning to say there is more cash burning right now. They may be reducing their hiring, maybe reducing their spendings, but the research for metaverse is definitely a major one. All right. So what I can say is that this is used to be a really chart support. It break down. Okay, we can see there is no support. Correct. There is no clear support. So what I will do, all right, I will use Fibonacci level. Sorry, gentlemen, I think this week the video will be slightly longer. Let me see where's the Fibonacci retracement. All right, I will just drag it all the way from the top to the bottom. Okay, and then we will see the metaverse where will it hit. It actually break below the 20.3%. Am I right to say it break below? So that might be strong rebound here because it's the last resistance. So then I will just draw again. Okay, so we will be looking at 86, 71, the next resistance. All right, but because okay, this is the level. All right, so let's remove to have better view. Okay, so this is what we are looking at right now. I don't mind sharing with you guys how I plot and look and analyze my chart. All right, based on Fibo. If you have been following me, I'll be using Fibo, moving average, volume, and price action. All right, I can be showing you guys how I draw. By all means, if you can capture it, it's all good for you. So this is what I'm looking at right now. Okay, but do take note. My view is that the market for tech dropped crazily. True or not? The big brother, all the earnings not good. Gap down, even for Google, even for Amazon. There will be a lot of investor lover, there will be a lot of stock lover coming white knight to save the counter itself. I won't be surprised the market gap up from here. I will be surprised, to be frank, because they will always give one reason. The stock is very cheap. Grab it now, do not miss it. On fundamental wise, it's not very good. All right, because the CEO also say it's losing money. So if you are more savvy enough, or you do not hold any position currently in Facebook, all right, you want to ride on the herd's behavior, the investor behavior, you can actually enter now. For people who are more savvy, watch out for this circuit level between 70 to 85. All right, it might be a good price to accumulate because it's really heavily oversold at this price. So we may see here and then it bounce back. So something like here, give some way for it to drop before it bounce back. All right, so we are trading right now, not investing. Facebook is good, but let's wait for the metaverse to success, or at least 80-70% step into the success channel, success way, the path before we join them, right? We don't go ahead of them, we join them instead. All right, we join once they success. So Facebook wise, if you do not want to play this risky part, just step aside. Okay, otherwise this is the level I'm watching. Okay, not going to remove. I will come back and write in the chart later. So next counter, we will be looking at some counter. Take note, Carnival is performing. All right, so this is what I have been saying, right? I say it break, but it didn't. It came down, it break below. Like I always say, if you have been following a couple of my candlestick or my price action, I say that wait after it break all-time low, which is this the $8 plus. After it break below, the candlestick come back, this is actually a good entry sign. Okay, why? Because there's a lot of people actually put stop loss here. True or not? If you will be trading, will you put stop loss here? Because it's the previous low, 2020, right? That is during the COVID period. So if let's say this is the previous low, it cut off, all right, all the stop loss, it right back up. For me right now, if I'm going to invest or I'm going to trade, so Carnival is next I'm looking at, but provided the major trend is upside, so here will be my new stop loss level. Alright, I will continue to ride until this moving average come back, which you can say is $11, $12. Alright, $11, $12 will be the good short profit. This is really chart, gentlemen. Look at day chart. Alright, look at day chart. There is still room to grow. Okay, there is still room to grow. Okay, so this is what I'm looking at. Firstly, $12. Okay, so I'm looking at this area for it to go up from $9 to $12 or $11. There's still $2 to $3 earning. Of course, the risk reward will be 1:1 at this price. Okay, at this price will be 1:1. Alright, so that is my view for Carnival. I'm more on the upside for it. Next, we will be looking at certain counter. Oh, one of the counter is Singapore shares. Pardon me if you do not trade in Singapore shares. This is what I mentioned in my Telegram group as well. So I mentioned that this is the low. Alright, so people who actually buy, not to worry because you haven't go below. A lot of people put stop loss here, right? So market is good, This is what I said. Okay, let me erase. We just put here. Okay, right? So the previous low, or we can say this low, we consider the weak inside. Okay, gentlemen, let's take a look at the day chart right now. Am I right to say? So the market break below, which is the low of 250. Okay, come back, open up, go higher, come down, didn't even touch the way low. Alright, so my view on SATS, or perhaps you believe in Singapore shares, you want to pick it up long and hold for slightly longer term, this is a good price area for you to go up. Okay, this is a good price area for you to go up. This counter for SATS, I think is good enough. Going back to $3 isn't that hard. Alright, isn't that hard. I like this counter. Perhaps you can say I'm biased. What causes the fall of it, if you go and Google, is mainly due to M&A, acquisitions, merger and acquisitions. I think they acquisition one of the company as well. It's not showing any good light for the investor to feel that because the current market economic situation, if they need to save the money, right, to withstand of this inflation, this bad economy. But I think it's also a good chance to enter in when the market is not doing well. Company will actually sell cheaper. I don't know what is happening over there, but personally, on technical chart perspective, I think there is a good price to enter for SATS. I'm looking at $3. Alright, I will write in the code and save the chart later. Alright, so it's almost 24 minutes. Let me point another two counter. Next counter is actually BABA. What is happening on Chinese market, on Hong Kong market is performing extremely badly. Can I say that? It's performing extremely badly. Okay, so I just remove all the drawing. Okay, so we can see that $55. Why I remember so clear cut? Because I helped someone. So yeah, I know $55 is the price I'm looking at. Sorry. Okay, I help someone on this counter as well to manage the portfolio. Alright, so we can see that 2016 BABA performing all well, straight down, not to repeat again, Chinese government politics issue, right? Right now, $55 is actually the all-time low. Okay, once it crossed below 55, not good. A lot of stop loss was triggered. Unless you are waiting for my strategy, break below, recover back, and then you buy. Fair enough, fair game. If you do not hold any BABA, or if you have buy in along the way, to me, if you believe in BABA, right, I think it's risk averse to buy it right now. The next batch of dollar averaging For new investor, you want to ride on Baba trend, is also a decent price for you to buy. Why? The time reverse to, 7 years or 8 years back for you to enter once again. Why not? True or not? You might be, wow, when the price is ever here, wow, when Baba go to, when it was $80, $100, I should have grabbed it. Price return back below the $80. What are you waiting for? Yes, definitely the politics change. We know what is happening to the Chinese side when they are choosing after Xi have took over the third terms. There might be a huge change. The regulations change. They might step in. There might be, you know, a lot of things happening. We won't know. We don't predict. But based on chart perspective, I think it's good. Just manage your risk. If you know your cut off is here or here, we are doing a good riding at this price right now. Okay, so for me, my view for Baba, hopefully the government will step in intervention to make the regulation more stricter. Otherwise, this is a price I'm looking for the upside for Baba itself. Okay, of course, if you want to wait or you want to step up, I won't blame you, but this is actually an oversold price for me for Alibaba. Same goes to related company like JD. If you don't like JMA, you can go and look at JD. You can look at Pinduoduo. Okay. All right, this is what happening. See, I even have the support previously I dropped 44.6. This is the weekly chart. This is not I draw right now. This is what I'm saying. Go up, come down, gap down, reverse back. All right, so this is what I feel on Chinese counter. Second thing, watch out, Hang Seng Index. We are heavily oversold. All right, we are heavily oversold for Hang Seng Index. Just okay. Okay, I think there's no drawing. Or I remove it. Okay, for Hang Seng Index, just watch out. Heavily oversold. Okay, so for Hang Seng, I think we need to go to the monthly view. Well, bear with me, gentlemen. I know there's a lot because I just want to give you guys a most latest update. Alright, so this is what I'm looking at. Break below, not a good sign. Not a good sign because they might be worried on the Chinese politics. Will they take over the the Hong Kong country to merge as one or not? So 14,000 go back to 12,000. I'm not surprised. Alright, I'm kind of bearish. Any technical rebound is possible because it's a straight drop. So benchmark 2020, which is the low, right now is break below the COVID low. Alright, not to be surprised. Alright, so which is this low? Global financial crisis. Okay, so we are not far away from it. It's just 4,000 points. Same goes to China A50. But what will save this Chinese market, right? Okay, this is what I mentioned, right? Break below this trend, we are looking down. Alright, so this is the 2020 COVID low. Right now, COVID, they still want zero policy, right? Zero policy, some more economy will be affected. So this will not hold for them at this point of time. Going back, where will I look at 10,000 as well? Same goes to Hang Seng Index. Not to surprise, it will drop. Where will it have a major reversal, gentlemen? If you want, you can ride with the government policy. It's always still early. Alright, you can ride. Even for Baba, all these, if you don't want to pick it right now, you want to wait for the government policy, can. When you look at the news, the moment they restrict zero policy, the moment they support the economy, the moment they are not going to increase their regulations, that is all the sign showing a turn in the market. Otherwise, just continue to shut it down or just continue to stay away from these two markets at this point of time. Okay, next counter, we will be looking at gold. Alright, I just try to go faster. Sorry about that. Alright, next is gold with a gold. So gold I have mentioned, immediate support. Okay, break and close below 1670. This is 160, the red color line. Right now we are really below, gentlemen. We are really below. Okay, so just want to highlight. First candle below, second week candle close below. We close at 1644. So right now, to me, go bearish already. Alright, to me, go bearish already. Just have a good risk management. I'm looking at 1570 next counter. Alright, so dollar index, yes, everyone will be set on dollar. So to me, oh my god, sorry. Alright, so there's a lot of drawing. Oh no, I'm going to come back. Okay, I think I draw some here and some Fibonacci here. Okay, so let's remove all. Okay, so here is my first level. Okay, so let's come back. To be frank, if you say that Dow Jones turned bearish, I don't think so. I think it's a right with the trend. We are still on a technical rebound. I don't surprise it's reached here before we go for the next 75 basis point. But since it script so nice, 75 basis point, right? So next week, following week, 2 weeks later, the announcement of 75 basis point will not caught anyone in surprise anymore because it's almost fixed. What will caught people in surprise will be their voice, their certain tone, or what will happen in December. Will they continue to go harsh on it, or will they relax down? This will determine the life or the fate for dollar at this point of time. Okay, last counter. Let me stop paid certain counter. Last counter I'm going through is BTC USD. Okay, that is the last one. Just want to touch everything. Cryptocurrency. Can you see? The last one is 3rd September, which I said 18,000 is a support, right? So we can see that right now, where is the market? It's actually hovering. It's actually hovering. When the longer it hover, the stronger it is. I don't like all this, but I don't want to delete. Alright. Okay, this is what I wrote. Okay, this is what I wrote. This is what I wrote. Okay, the longer it is hovering here, when it break up, it's a very strong sign. So I won't be surprised if I'm going to move this arrow to here. Okay, take note, 20,000, 18,000 is the support. Anything above that, we are looking at rebound back to 25,000. If dollar is going to come down, if economy is going to be good, free money there, easy money there, everyone will change or shift their easy money to the cryptocurrency. So 25,000, yes, high chances. So if this go up, same as Coinbase, all right, I'm not going to show Coinbase, but I think there is one. Okay, why I show this, gentlemen? We know what is happening, right? So Elon Musk take over Twitter. I think he put this guy, I don't know, speculation. There's speculation that he may be the CEO of Twitter, because he's Elon Musk sacked the Twitter CFO and CEO, right? So this is what happening to this coin. All is speculations. All is speculation. To me, I don't want to touch on it, but I just show what is happening on the market, the meme stock, the meme counter. All right, this is for people from here. If you never get out, you want to get out, by all means, get out. If you want to long again, I don't advise. All right, you want have quick profit, by all means. I am more strict and disciplined traders or investors. All right, so that's all for this week weekly market update. So sorry to drag you guys for half an hour. Hopefully you guys enjoy. This is really important for the next 2 months. It's very, very volatile. Are we going to see what's happening? What's the year end like? If let's say we go below, that is show the credibility of what Fed is doing. If market go above higher, what Fed has been doing for the past 10 months totally go into the drain, right? Because the inflation rate is too high, right? All right, so that's all. Enjoy your weekend. Bye bye.